Meet Kevin thinks the market's rigged?
And you just said that on camera. This going viral.
I just want to thank all my new subscribers. Thank you so much for helping me pass 100. If you haven't subscribed, hopefully I can earn it today.
Guys, good morning, Ape Nation. How is everyone today? It is Monday, June 14th, 2021. It's currently about 7 o'clock a.m. A few things I want to touch on before the market opens this morning. I got into last night about the treasury bonds and how everything didn't have to be liquid cash. And I just want to say, I know I usually give Kevin a lot of flack, but he actually explained this really well last night to where even I can understand it off the first take. So I want to just touch on his video a little bit. We'll just jump around together and watch a couple of things that he says that I agree with and, you know, that are based on fact, because I looked him up after I finished my video last night. So let's just jump in real quick and see what Kevin's talking about here with this repo disaster, because it's important to know exactly what it means and what it doesn't mean. It could possibly mean that the hedgies are going to be looking for cash and that they're trying to liquidate things, but it also could mean, it doesn't necessarily mean that this is hedge funds money right here that we're talking about. So let's get into it.
Hey everyone, me Kevin here. In this video, I'm going to talk about the Federal Reserve, some crazy things happening with repos, and we'll talk about what I believe the truth is in terms of what's actually happening. And I'm going to be very clear in terms of what I do think we know with certainty and what I don't think we know with certainty. So we'll go into that. And some of this will actually relate to AMC as well, AMC stock. So these things are all interconnected, and we're just going to go through it piece by piece. So the first thing I want to say is I'm a little bit pissed with how the market works, because you know, there's a reason 70% of us believe the market is rigged. It has to do with the fact that there are so many rules and norms that exist with hedge funds and institutions that allow them not to disclose certain things. Like, they don't have to disclose their margin debt. They don't have to disclose all of their derivatives, and they don't have to disclose their short positions timely. All of these things are things that really, by default, give hedge funds sometimes a short-term advantage over us as retail investors. And it's one of the reasons we kind of hate the hedgies, because think about it. Like, we have information that we can publicly get and do due diligence on, right? But so can the hedge funds. The hedge funds can get that same due diligence. Hedge funds, on the other hand, though, they know what they're doing, and they talk to all their friends. You know, that's what happens. Come on, those wine and dine dinners, they all know what they're doing with each other. They have that special advantage of way more information over us, and that's really frustrating because they have both. They have the public DD, they have what we research because we post it all, which is fair because that's how we share it around, but then they also have their own knowledge of what they're doing internally, and I think that's why in the short term a lot of us get very frustrated, and it's like, wow, this game kind of feels rigged, because, well, in many ways it is.
So Kevin apparently is catching on that the market is rigged. It's only June 14th. I still can't believe he's charging $700 for a stock course. And he is that delusional to think that we are on a level playing field right now, up until he taped this yesterday, apparently. I don't know. But he seems delusional sometimes. But like I said, I'm giving him credit on this video. So, yeah, Kevin, the playing field is rigged. All right, let's jump to the next clip. I want to go to right here.
And AMC. I just want to get this off my chest. I personally found the best way to deal with that is, quite frankly, hodling. Like 98% of my portfolio is a hodl portfolio. I'm hodling my AMC. I'm hodling Tesla and tech and consumer discretionary. You know, all my favorite companies. I don't care so much about the short term. I know that in the long run, I can outperform these hedgies all day long because they're trying so hard, trading every single day, not to lose customers. I don't care. I'm not beholden to any customers. I'm not beholden to people depositing my money with my fund, right? So I don't have to play.
Okay, so an awesome point, right? He's right. I mean, I know we've been saying buy and hold for months, but at least he's catching on. That's right. You just got to hold. We just hold, and eventually it'll cost them too much. We can hold right on our end. We're not losing anything. We're gaining. It's enabling us to double down, to buy dips. We can play this game for a while. As long as you don't have every cent tied up in AMC right now like me, you know, what's the big deal? All right.
Remember those rules, the SLR rules, which you don't even have to know what those are. It's just basically rules that would have required banks to have more treasuries, and they're able to have less now because those rules expired.
So we know right on March 31st, the SLR expired, which is basically something they ran for the whole year from the previous March, from 15 to 30% on the banks on what they had to hold. So that's why he's saying here you will see a run begin right after March 31st of this year.
You go right here, the line over here, there we go. If we could just tap it, there we go. We tap the peak over here. Oh, it keeps going away. There we go. You'll notice it jumps right here on March 31st. And so this was possibly, this whole run here is possibly a symptom of banks holding less treasuries, having more cash, and when they have more cash, they hit the limits of how much cash they can hold, and they have to throw it into the Fed money market system, well, the money market system, which throws it in the repo system. So, full recap here, and then I want to get to some bottom lines, all right? Full, very quick recap. Banks got more cash. They can't lend it out as fast. We talked about the evidence that we could look at for why they can't lend it out as fast. Talked about margin debt. We know banks have a lot of cash. We know that the amount of treasuries banks needed to hold has substantially dropped because reserve requirements have fallen, which allowed banks to dump treasuries, which means they have more cash. So bottom line is, banks have a crap ton more cash, and this reverse repo system is kind of like a buffer valve. It's like, okay, well, if you got that much cash, put it over here for now. You know, it's kind of weird and funky how it all works. It feels odd. And this is also exactly, not just today, but in the past as well. I feel like I have a grasp on what's happening with reverse repos, but I know enough to know that I don't know everything. But I do know enough to say that that line going up, it ain't borrowing. I also know enough to say that we can't say with certainty that those are hedges depositing more money because they're getting squeezed and they're getting screwed, and it's just a matter of time before it blows up in their face. I wish I could say with certainty that was true, but I always want to be very truthful with my audience. I cannot tell you that is with certainty true because I don't have the facts to substantiate that, because hedge fund disclosure laws aren't freaking transparent enough, and there's very little for us to look up that kind of information, and that's what's very frustrating. And so, two things that we got to remember here. Bottom lines. Number one, there's an amazing set of programs linked down below that you can use a 40% off coupon code. Again, linked down below. Kevin, just where get to it, buddy. If you go to the website, you're going to see a lot of amazing programs that can help you build your wealth. And you'll think like I do, too. You'll change your entire psychology in terms of perspective of what's actually happening out there in the world, okay? The next thing to remember is the easiest way to beat the hedgies is just to hodl and minimize your debt. Because if you minimize your debt, you're not going to get squeezed out. If you hodl, who cares what the number is? Do you have more shares today than you had previously, or do you have less?
And guys, I agree 100% with Kevin right here. As long as we hold, we're good. The stock ain't going to zero. And I'm going to tell you why right now coming up in this next clip. But holding is the option that we don't have to worry about anything. Who cares what happens to the number? Okay, guys, so let's touch on a couple different things. First of all, I want to go and talk about distractions. So I noticed something yesterday. 3 things. First of all, Lou versus Wall Street, and, you know, I like the guy. I think he brings a good perspective. At least he was bringing a good perspective. And now, yesterday, he made 3 videos over an hour. I watched all 3 of them, and he mentioned CBD 5 times more than he mentioned AMC. He mentioned AMC once in over an hour of videos. I don't know what's going on, but how can you not be talking about AMC at all on the Sunday before? He's like one of the biggest YouTubers, and you know, he makes other announcements. Let's see, what else did he announce yesterday? He made 3 videos. He mentions, like I said, CBD 5 times more than AMC. I guess someone reported him to the SEC for coming out with a video about a stock tip on Monday. I mean, he did the same thing last Monday with Clove. I don't know what the big deal is with that, but I know he can get in trouble for that, for manipulation. But so that's off the table. So no stock tip this morning. So if you're looking forward to that, it's gone. But he is launching his website and his second channel supposedly this week. So I mean, distraction after distraction. Like I said, I like the guy. I just wish he would stay focused on AMC and the MOAS. All right, next. So this guy that I always report on, this guy Tom Z, he makes his video last night, and of course has a thumbnail of like 1,000 plus this week. But at the end of his video, he's promoting one of his buddies that's a crypto guy. Why are we talking about crypto? First of all, in a MOAS video, 100,000K, of course, 1,000 plus. But why are we talking about crypto at all? Like, stay focused.
He is starting a YouTube channel, and he's doing a really good job. He's actually part of the company that we're starting as well, and he's doing a lot of YouTube videos on cryptocurrency.
That's fantastic, guys. Good luck with that. All right. Next thing I want to talk about, Zip Trader last night. Okay, now look at Zip Trader's videos here. He's made... Now, mind you, he had no AMC videos leading up to 2 weeks ago. Until we started skyrocketing. 0. Now, I like this guy. I think he's pretty smart, and he makes some pretty good observations about the market overall. But, I mean, just look. We have to go back to when? AMC 2 weeks ago. Okay, basically, so when we started climbing out of the teens, he started making AMC videos. Now, last night, he's got a video, and his video on a Sunday night before, we have this huge week coming up. He's talking about Neo.
And your teamwork. Okay, folks. So
and I'm like, why would you be talking about Neo when you've made 12 videos in a row about AMC, and the Sunday night before we're going to have a crazy volatile week, you're talking about Neo? Now, don't get me wrong. I think Neo is a fantastic buy after we squeeze. I think it would be a great investment to the future. They're about to go live in Europe. I think they will beat out Tesla in China. China doesn't want American companies to do well there. So, they have Tesla now, but they're going to back their own company before Tesla in China. You're talking about 1 billion people. And I know they have plans on India. And their cars are, first of all, their SUV is really nice looking. Nothing compared to the Teslas. The Teslas are not a nice SUV at all. So, I think it's a great play for down the road after we squeeze and we have a bunch of money that we need to reinvest. I think then it's a good call. All right, so those were the 3 things I want to talk about there. Real quick on the box office, A Quiet Place 2 makes new box office record. Became the first horror movie after the outbreak to break 100 million at the box office. And let me just say, I had never seen A Quiet Place 1, so I went to go watch it. Friday night. What a great movie. That thing was awesome. So now I have to go see this one at the theater, which is good because I can put some money into my company with $20 popcorn. But yeah, so it beat out In the Heights, which is the guy who did Hamilton on Broadway. Lin-Manuel Miranda. They beat out by like $300,000. Not much, but anyways. But Conjuring 3 and Cruella crossed 100 million globally. Quiet Place 2 hits 185 million worldwide as Pixie solid offshore holds. So, good. The movies are doing good. AMC is doing good. Our stock is strong. You don't have any worries as long as we hodl. And since I made my first video like a month and a half ago about AMC, I was doing other videos before that. But I always said, and this was my thing, when I was buying stock back then in AMC, when it was 10, 11, 9, 8, I was like, there's just no way the next 12 to 18 months, which is possibly how long we could have to outlast these hedges, there's no way AMC is going to dip below the prices I'm buying it at right now. Because just everything that's coming up in the future is very bright for the movie industry. So I was saying that for a while, and that's why it was a no-brainer to me. Why would I park my money in the bank when I could put it in AMC, and I'm almost guaranteed to double or triple my money without a short squeeze? It was a no-brainer, and that was my first video I ever did, was, guys, just buy it and park it, because the chances of AMC going to 0 are about as likely as, well, they're about as likely as me getting 1,000 views on this video. So I think we're going to be all right. All right, let's take a look at pre-market numbers real quick. AMC right now, we are at $49.96. We're up about a percentage point, 56 cents. And GME, for you GameStop guys, we are up $2.86, about 1.23% in pre-market. So,
that's all I got for this morning, guys. I appreciate if you made it this far in the video. Again, shout out to all my subscribers and viewers. And let's get ready. Buckle down the hatches because it's going to be a crazy week, I think. Guys, just be careful. Don't panic. If you see red, that's an opportunity for us to buy, right? If we see green, great. Let's hope that somehow this gamma squeeze this week shuts off the short squeeze and I can stop making videos about AMC only. I mean, I love the stock market, but I would like to talk about other things as well. Like I was saying earlier about the NEO thing. Like, that's a great investment for the future after we squeeze. I have to stay focused as well as you guys. There's so many things I can take away from our focus on AMC. All right, I'll get out of here. I'll be back later on today. This is Ape Nation. I'm the Massalorian. Love you guys. I'm out.